Hello friends, we are going to continue with our chapter of debentures, right? And in the last lecture, when we started with debentures, we discussed about what are debentures, right? It is like a loan taken from public, not from bank, right? So, what do you say? It is a loan from public, right? And you have to pay interest on this loan, that is interest on debentures. And I told you that this interest rate is determined at the time of issue of debentures. So it is a predetermined rate, that at what rate you have to pay interest to the public. Then I told you that whatever the terms and conditions are related to repayment of principal and payment of interest are also determined at the time of issue of debentures. So everything is crystal clear at the time of issue only. Everything is pre-decided at the time of issue of debentures. Clear? The interest rate is determined. When and how you have to make the repayment of debentures, that is determined, that is known as redemption of debentures. That is pre-decided at the time of issue of debentures. This is very important, right? Then we discussed that from the duration point of view, our debentures can be long term and short term, right? Long term means the money is to be paid, that is the money is received for a period more than 12 months. That is, it will be repaid after a period of 12 months. In the short term, the money is raised for a period less than 12 months. That is, this money is to be repaid within a period of 12 months. So, it is greater than 12 months. This is less than 12 months. Right? Clear? Long term and short term is clear. This is what we discussed in the last lecture. Here in the last lecture, that one note I missed out, write that down. That is an important note regarding this. If the question is silent, always consider debentures to be a long-term borrowing. Clear? So, if the question is silent, always consider debentures to be a long-term borrowing. This is important, right? So now, today what we are going to do is, in this lecture what we are going to do is issue of debentures. Now this issue of debentures is almost similar to what we have done in issue of shares. So friends, I will recommend that you must go through issue of shares first, because I will not go in detail of this issue of debentures. Only one part is different from issue of shares. I will go in detail of that. Clear? Now again, issue of debentures can be for two types. One is cash and the other is consideration other than cash. Right? This is what we discussed in issue of shares. Then if it is for cash, then it can be at par or at premium. This is what we discussed in issue of shares, exactly same. Here one point we have, here the debentures can be issued at discount also. Right? In case of shares, we say the issue of shares in cash can be at par or at premium. But in case of issue of debentures, debentures can be issued at discount also. Now there are certain provisions regarding this discount that we are going to discuss. Right? First we will discuss the entries for at par and at premium. That is absolutely similar to what we have done in shares. You have to just replace the word share with debentures. Right? Let's see quickly. What is the first entry in case of shares when you receive the application? Here also you will receive the debenture applications. So the entry is bank account debit to share application. Here you will write it as to debenture application account. Clear? Debenture application account. Clear? Second, at the time of allotment of debentures, what you will do? First you will transfer this application money to, there you transfer it to share capital, here you will transfer it to say 10% debentures account. This is not the capital, we will transfer it to debentures account. Clear? Then what happens? Allotment. First the allotment will be due allotment money, debenture allotment account debit to 10% debentures account. Right? And if these debentures are being issued at a premium, then you will take that premium again to securities premium reserve account. Right? Clear? And I told you there also there are restrictions on the use of this securities premium reserve account. In this chapter we will study for which purposes this securities premium reserve can be used. Right? So we will study in this chapter that for which purposes this securities premium reserve can be used. There are very limited purposes for which this money can be used. These restriction has been imposed by Companies Act 2013 section 52. Clear? Now next, when this allotment money is received, you will say bank account debit to debenture allotment account. Right? Similarly for the calls, right, that you know. Similarly, if you have the first call, second call, the similar entries. Clear? This much is clear. Now, if the debentures are issued at a discount, now, if the debentures are issued at discount, then what you have to do? First and second entry will remain same. Right? Will be same. Say the discount is given at the time of allotment. Then what will be the journal entry? At that time you will say debenture allotment account debit. Now in case of premium, you credit the securities premium reserve account. In case of discount, you will debit a specific account that is known as discount on issue of debentures account debit to say 10% debentures account. And I told you this 10% reflects the rate of interest on debentures that is predetermined at the time of issue of debentures, right? So in case of discount, this is going to be your journal entry. Here you will take discount, right? Here face value minus discount, and here the face value. Clear? Very simple. In case of discount, you have to take the amount of discount to a specific account that is known as discount on issue of debentures. Right? Now, there are certain provisions regarding this discount on issue of debentures that you must be knowing. Let's see. Write down the notes. Number 1, discount on issue of debentures is our capital loss, right? See, this discount is a loss for the company because you are not going to get that amount. It is our capital loss. Second point, this discount must be written off within life of debentures. This means that if you are issuing debentures for 10 years, right, whatever the discount on issue of debentures is, it should be written off within these 10 years, right? You raised money from the public, you issue the debentures, you say we will pay back this loan after 10 years. You have taken a loan for 10 years from the public. So whatever, if you are issuing the debentures on discount, whatever the discount is there, you must write off this discount within the life of debentures, that is within 10 years. Clear? Now this discount can be written off through profit and loss account or securities premium reserve account. Now you get my point. I just told you that there are restrictions imposed by Section 52 of Companies Act 2013 regarding the use of securities premium reserve. This is the first purpose for which you can use the securities premium amount, for writing off the discount on issue of debentures, right? So this discount you can write off through securities premium reserve account. Clear, friends? So the discount can be written off either through securities premium reserve account or through the profit and loss account. In this case, what will be the journal entry? The journal entry will be securities premium reserve account debit to discount on issue of debentures, right? This will be the journal entry in this case when you are writing off the discount on issue of debentures. Clear? Is this clear, friends? Now, disclosure of discount in balance sheet. Now, how to disclose this discount on issue of debentures in the balance sheet, that is important. For that, first I say is amount of discount that is to be written off within 12 months. If the amount of discount is to be written off within 12 months, then how to disclose it in the balance sheet? Let's see. This is your balance sheet. Now, this discount on issue of debentures is your loss. And if you remember, where you show the loss on the asset side of the balance sheet, isn't it? You show loss on the asset side of the balance sheet, right? So here, when I talk of assets, now if any money is payable, any money is to be written off within a period of 12 months, we call it as current, I'll say current assets. Now under the current assets, you have to show it as other current assets. Now for this other current assets, you will have to prepare notes to accounts. Here you will say other current assets discount on issue of debentures, right? So whatever the amount here is, this other current assets will be shown under the subhead current assets, main head assets. So this is how you are going to show in the balance sheet the amount of discount that is to be written off within 12 months. Right? Then second thing, if amount of discount is to be written off beyond 12 months, if amount on discount is to be written off beyond 12 months, then how to disclose it in the balance sheet? Again, this is a loss. This loss is your asset only, right? Then you will say assets, and anything which is to be paid, which is to be written off, which is to be received after 12 months, that is what we know as non-current assets. In the non-current assets, you will show them as other non-current assets. And what is there in the other non-current assets, you will show in notes to accounts. Right? Here you will say other non-current assets discount on issue of debentures. Right? So this is about the disclosure of discount on issue of debentures in the balance sheet. Clear, friends? So this is one important aspect that I wanted to discuss about discount on issue of debentures. Rest, issue of debentures is absolutely similar to what you have done in issue of shares. Clear? Just replace the word share with debentures. That's it. Clear? The provisions related to discount on issue of debentures must be clear. right? So now we discuss that issue of debentures for cash at par, at discount and at premium. This is what we have discussed, right? Then the next topic is issue of debentures for consideration other than cash. This topic, friends, is absolutely similar to what we have done in shares. This is 100% similar to shares. So I will not specifically do this topic. Cover this topic in the shares, right? And then replace the word shares with debentures. That is what you have to do. Now you know how the shares are issued at a discount. Then this consideration other than cash, you can do it from shares. If you have understood in the shares, then I will not touch here this topic, right? Do it from the share capital chapter. Clear? There we have discussed this topic in detail, so I'm not going to touch upon this topic, right? So friends, if you have any queries, just send me an email, right? Send me an email at ksjteaching@gmail.com, right? So in the next lecture, what we are going to do is, I'm not going to touch upon issue of debentures for consideration other than cash. That you can do it on your own, right? If you want it in detail, you can go through the share capital chapter. You will understand everything very clearly there. Still, if you have any queries, just send me an email, right? So in the next lecture, what we are going to discuss is issue of debentures as collateral security. Right? This is what we are going to do in the next lecture. Right, friends? So that's all for this lecture, friends. Thank you so much.